I'm Sandeep Rana. Today we're going to discuss about a stock called Repco Home Finance. As the name it suggests, it's a housing finance company. 74% of its revenue comes from housing finance, home loans. And 24% comes from non-housing, which is home equity. Now, if I just talk about the breakup of the clientele, it has 51% comes from non-salaried class, which is where the moat is, because this is a difficult segment to cater to, and processes required here is little more required. And balance 49 comes from the salaried person. Now, our company is doing very well now in last 1.5 years since the new management has come in. But let me go back in history. The company got listed in 2013. And from 2013 for 3-4 years they did very well, but some issues came in. There were few internal, and of course there were external issues also, like demonetization, and then COVID happened. So company actually started deteriorating in terms of revenue and balance sheet. Now in last 1.5 years with the new management coming in, there are a lot of things that have changed. So processes have been simplified, the underwriting process have been improved, there's a decentralized in terms of power, so branches have some way to do business, and there are multiple things that they have done. There's a new software that they have bought in and implemented. All these factors have helped the company to come back into business and do better work. Now in last 1.5 years, if I see, and going forward what we believe in, the company can easily grow at credit growth of 14%, and I think there can be few upside, because right now they don't want to go at higher pace because they know what issues were there in the past, so they want to be little slow. But they are doing very well, and they can actually further accelerate the credit growth if they want. On the other hand, if I just look at the ROA right now, it will be around closer to 2.8, which is very good. And at the same time, your ROE, which is very important factor to look at all the NBFCs, would be closer to 15%. Now again, it can further improve, but I'm saying this is the number that looks right now. If I talk the NIM, it's closer to 5.3 right now. I'm saying anything above 5 will be good, and it's one of the highest amongst all the NBFCs, which if they're able to maintain, that will be very good. Now coming to the valuation side, given that the company will grow at 15%, your ROA would be 2.8, ROE will be closer to 14 to 15, and we are getting this closer to 0.7, which is very, very cheap, because I think this is one of the cheapest stock with this kind of size. So I think this can easily go to 1.1 also. And given that, I think around 30 to 35% can be made in this stock with a target of closer to 600 rupees. So this is the thesis, and this is a very good stock, because if you ask me personally, can I keep this stock for next 2-3 years, and can it be a multi-bagger from here? I won't be surprised, because with the earning coming in and it trading at maybe 1.5 times in next 2-3 years, this can be actually a 2.5 to 3x stock in next 3 years. So that makes it very, very interesting, and I think the downside risk is also lower in this, because the most of the hard work that was required to get this business in shape is done by the new management, and I think from here on it will be easy for them, because the hard work is already done, the tough work is required with them is already done. Now from here on, I think the journey will be simpler and it will be very interesting. So I think we should have this in our portfolio. Thank you very much.